Hey everybody, hey traders, happy Tuesday. Welcome back. Fresh off the President's Day weekend, markets were not really interesting today outside of a little dip through the afternoon. Here is the SPY starting right out around some fresh highs once again. Not quite there. NASDAQ did poke all-time highs again today. So we are officially at 2 all-time highs for the S&P this year. Not quite much of a thrust or momentum higher. Here is your SPY hitting. It wasn't SPX, by the way. We're at 1 high in the SPX and 2 pokes of the SPY. And still, I remain cautious. I keep saying the same thing. I'm just looking at this potential downside window. I'm not saying the market has to turn and go south into a crazy extent, but I'm not necessarily comfortable getting really, really, really bullish without having some type of stretch away move that's going to ultimately come back and have a correction. So I remain cautiously bullish. I did actually post this on Twitter, I believe, as well as YouTube and TradingView. I did a video on this yesterday, so I can show you that right here. Let's see, we're live for this one. Here it is. Okay. Our markets video update was posted yesterday. Yeah, so my Twitter handle's at Chris Pulver. Posted that yesterday on TradingView, also on YouTube. But point is, bar counts that I see that are getting my attention: SPY, SPX, XSP, ES, so everything S&P 500 related. I did add a couple of hedges in. I added 2 hedges. I've got this trade out to April 30th, and then I also put in a 6,200. I did a 6,200. I added this in today. This is another like 0.25% hedge. 6,200 by 57.25. Bear put. Basically, the risk is around $488 for a potential 1889 profit. So I'm just throwing a couple of really inexpensive hedges out there to see. And this is by April, so I mean anything could happen for the next 60 days or so, going out to the expiration. Are we going to hit this bar count? If we don't, and we just continue to chop sideways, then I'll continue to do what I've been doing, which is a bunch of out of the way, big room for error, lots of margin for error income trades. And if I see implied volatility go higher, I will probably just sell premium, collect income, collect credits, and let it add up. And I'll just keep cash at the hand. Then that's it. Gold continues to run pretty nicely. China's had a pretty good run so far. We have the DAX performing really well. It's been one of the better performing assets index-wise this year. HSI for China also doing really, really well, up again today. Had a really good surge on Alibaba. 126 with highs around 128. I was contemplating actually taking some profit. I measured a move here on Alibaba, low to high, low to high. So symmetry is right there around that 130 handle. It's not a bad spot to protect if you don't want to have the stock running in your portfolio. It's not a bad spot. This has been a 60% surge with essentially no pull. So I would expect there to be some type of dip or pullback, but I'm curious if we are not only going to go, up here, but also build up and let people actually catch up to this trade and see if there's any additional, flows that want to come into it. I looked at the bigger time frame today, and that's essentially why I'm staying in the trade. So if we go from a high low swing, you're taking the, peak back here in 2020 and the low in 2022, and looking at some of these major levels, even a 30% pullback or a 38% pullback or even a 50% pullback, there's still some upside potential on this stock. So I'm going to let it run a little bit longer. I haven't built up, a huge position on this, but I have a few hundred shares of Alibaba. I've got a few hundred shares of Baidu, and I think, technically speaking, they've got some good upside potential. Baba's been taking the big rip because it's been, given the AI endorsement, and therefore, everything that pretty much AI touches right now has been pretty solid. But Baidu still coming in nicely off the lows. This one's giving you a bit of a chance to accumulate more. I do have some ownership on this one around $86. Got a collar trade into April. That's a 100 or 105 or 110. Just depends on what account I'm using. But I want to try to not cover this too aggressively. I'd like to see if price can get up back to the September high at 115, 116. And at that point, I think we realistically have this stock that looks pretty attractive for a price target all the way up towards like 157. So if we just range here, that's still pretty decent for like a target 1, but I'm hoping that we can get to a target 2 at 155 or 157 before I consider taking any buy-do trades off the table. FXI continues to run. If there's any type of bull flag in here, I actually might add a fresh trade in on, let me go to Bitcoin really quickly. We're at 94. So Bitcoin pulling back a little bit. That's actually totally fine. Let me have a quick peek here on IBIT. We're at 53. Got a 52 by 51 credit spread. I might look at, let me see what I can do something down here a little bit lower, like a 46, maybe a 46 by 40. See if I can get some income on this. IBIT, let's go out about 60 days, 45 by 40. Okay, 45 by 35. So that's a little income trade. I could collect a buck on that. I'm willing to own the shares if I owned it at 44. Maybe it's better if I just do a 40. Let's use this with the lower dollars here. So 47 by 6 by 5. Collect about $1. Get a little dollar profit trap. That'd be better than just doing a naked put. Let's see here. How much do I like that trade? It's income in the next 58 days. If it stays above $45, it's about an 80% chance of profit. 45 bucks I could see. I mean, ideally, I'd like to say I'm going to buy the dip around like 43. I just don't know if we're going to get there. I can see more of a larger accumulation, like some fake out trades there where the bears can poke down, but not enough. So, I mean, 45 is not bad. If I take this little 1-1-1 trade or set it up with a ratio spread, let me see what this looks like. So let's go delete that leg, turn this 45 into 2 contracts. So I get $1 for that one, plus the profit trap of the debit spread side. That's a slightly better trade. I think I'm going to take this one here. If I take the trade, 45 assignment minus $1.02 minus $1 more for the bear put side, I'd own the shares at 42.98. I like that trade. This is out 58 days. So I'm going to take this trade here. Not bad. Yeah, I like it. So I'm going to go out 58 days, hopefully get filled for $1. You turds. 99 cents, hopefully. These should be pretty liquid. All right, got filled for 99 cents on that one. Add this in. Let's go now, mid-price. Okay, 99 not filling. Let's go 98. Getting filled at 98. Moving through the account list here. Okay. Okay, that would be 6746. Fair. Let's go there. Come on. $97 final offer. Got it. Okay. Adding this into the tracker. IBIT. 417 expiration. This is a put ratio spread, 46 buy put, and a 45 sell put. 97 cents credit on the low end, and 99 cents credit on the high end. If I was assigned, 42.98 would be the break even. Okay, going after some income on IBIT. John, negative credit. Are you sure your broker just doesn't have it displayed that way? Unless it ties up. I mean, how much buying power do you have? The trades required about, I think, like $1,700 or $1,800 in buying power for the waterfall trades this morning. But it might just be the trade itself is displayed as a negative balance, or not negative balance, but a negative amount that is actually the credit. Yeah, double check your platform. Who's your broker? What's your platform? When I started waterfall. Yeah, Carla, if you're not watching the live classes, we've spent a month talking through waterfall and why I'm adjusting the trades for now. It's totally temporary, but we have been taking waterfall trades since the start of the year with a specific, kind of a wide margin for error. And I mean, I've explained it in every Monday class, and I know it's taken up a little bit more buying power, but there's a reason behind it, because the last thing I'm going to do right now is buy a bunch of one wide credit spreads or debit spreads at all-time highs and not see the market go higher. So I'm taking the trades that I'm taking. I'm doing it on cash settled instruments. XSP is like trading the SPY, but it's cash settled. It's European style options. It's tax benefits of 60-40 split. We're generating a higher profit target. So instead of going after like a typical 30 or 50%, I'm usually going after 75 to 80+% or the full boat plus a profit trap. So if you're not following along, it's like we've literally been talking about it every class for waterfall income for a month. So yes, I know it ties up more buying power, but it's the safest way that I want to trade right now, and it's how I'm going to keep trading until I think the markets are in a better position. It's pretty simple. If I see the market, look, we can blow the top off, okay? So if this market blows the top off, awesome. I don't know if that's going to happen. And so what I don't want to do is load up week after week with these debit spreads or credit spreads right at the highs. And if price goes down at all, these trades are in jeopardy. You know, what's to prevent the market from creating a high here and then taking 1, 2, 3, 4 months from hitting that high again, right? If we have some type of pullback here and the market just chops around, or we have some nasty, like flush out, and then the market has to build its way back up. I mean, look, I really think that smart money is waiting for a pullback. They might not get it. You know, this market might just continue to grind and grind and grind and grind and grind, and that's fine. That slow grind is fine. But I'm not going to take chances at these highs when the market just with one reality check, when I think it's technically due. I don't want to be stuck up here at the highs with trades that price has to go to all-time highs and go to fresh all-time highs for me to make money. So it is a modified trade for the strategy. I've explained it for over a month. I like the trade a lot. I do the trade a lot. I'm incorporated into that waterfall income service because it works and I can have the flexibility to do it. And that's it. So if you like the trade, you take the trade. If you don't want the trade, you take another waterfall income trades that have been really easy. But when was that? That would have been when the market's going up. When the market's going up, when we've got a bullish environment, it's a lot easier when the market has a lot of upside momentum. Right now we have zero momentum. So if all I did was place a trade up here and price doesn't go higher, guess what happens? I don't make any money. You know, and if this market pulls back, this trade is even more difficult to get paid. So that is why I modified the strategy. Can you take the trade? Yeah. I mean, today, literally in the live session, I took a trade that was like a $900 risk that I could still grab 30, 40, 50 bucks out of. I'll take that risk. For the trades you're looking for really small accounts that require only like, $50 to $100 of buying power, I'm not doing those trades right now. So, I mean, give me a couple weeks, give me a month, but it's like, you know, the strategy. The strategy is not complicated with waterfall income. I'm not going to sit here and beat this up, but you know the strategy. If you want to take a one wide low risk trade, you're putting trades in right here at the top. It's totally fine. I don't like that trade personally because I think this market with any type of downside move makes it harder and harder to get back to the highs. If we go higher, that is fine. All is well. Congratulations, all-time highs. Like, I just don't believe we're going dramatically higher without having some type of, fake out, retest, then the market has a reason to buy a dip. I just don't see it yet. Okay. So all good. But I would say, Carla, jump in your classroom, watch today's class, watch any class from the last 2, 3, 4 weeks, because I've been taking a very similar approach to waterfall income for that reason, though. There is a reason behind it, right? I mean, it's because I feel like it's the best way I can place the trade for the service with the highest probability profit. Okay. How far should I mean, within probably 3 to 5 cents, John. I wouldn't go too much lower than my fills. I'd say within about 5 cents maximum. If you can't get my fills, 5 cents lower is about the max. Otherwise, you can move a strike here and there, try to get a comparable fill. Shouldn't be that different, though. Okay. All right, let me take a quick peek here. This trade was in for $11 earlier. And right now, it might be looking at some risk. Hang on a second. Yep, son of a gun. Let me look at a 610 here. Okay, we're trading around 61.13. Okay, let's go call side 15 to 65. Okay, so I get $6 on that trade. That looks a little bit better. All right, we'll see if price can stay around this 61.15 area, or price can stay. If I get a little bit of a drop here, let me move this over. I need a little bit more of a drop in this trade. So we need the underlying to fall just a little bit for this trade to work out. All right, so I've got some heat on this trade. This one looks a little bit better for the next 40 minutes. Ideally, this would be right around 61.15. So I'll keep an eye on that one for the end of the day. We've got a nice little watch list here that I'm pretty interested in watching. SPY and SPX looking for some type of volatility expansion move. IWM, same type of thing. This looks like there's some. It's pretty simple. There's energy loaded in some of these readings. So SPY and Russell, XOM is Chevron, ABR, AGAI, Bank of America, Qualcomm, Lyft, which I'm in with an earnings play out to next week. Chipotle, that's fine, trading at $54. I haven't had a pullback on that one yet. Chewy, which I got out of for a few $1,000s in profit. Coinbase, we got an earnings trade on that last week and made it pre-earnings actually. Delta Airlines has a nice little squeeze coming. Snapchat, we're trading at 10.95. I put in a covered call at 10.50, I think, for this week or next week. That's Morgan Stanley, United Airlines. O is a realty play. Boeing is at 180. Man, Boeing has had a crazy rip from like that 150 area. JD is China. X is United States Steel. The Dow Jones and Disney. These trades right here, I'm interested in all of them for some type of move, up or down directionally over the next like 30 to 60 days. I'm going to start looking for trades in this. I'm going to take a screenshot right here, and I'm going to start chipping away at these in my watch list and see if I can find a trade that I like. Okay, and let me see. I might have to change my mouse battery. It's getting a little flaky on me. That's better. Yep, my mouse is about to die. Perfect timing. Carlos says, so on the 559, 545, just stay above 559 for us to make money. That is absolutely correct. So 559 would be right here. you would need XSP over the next 45 days or so to stay above 559. So you have about an 8.5% buffer. So the market in the next 45 days would have to drop 8+% for that trade to be threatened. Could it happen? Sure. But I also think that even if we did make a drop for it, if we made a drop down here in the next 30 to 45 days, I think we're also going to see a dip that is aggressively bought. So one thing I will be doing would be, if we had a dip to that 200 moving average, I will be loading up some more waterfall income trades because it's a really simple strategy. It's just I want to time this market a little bit better. I want to deploy capital at where I think there is a good spot for it. Okay. And I think this is going to be, at the end of the year, it's going to be like, how much time do we have to sit here and wait for any type of major direction? And it could be months. I mean, it's been a pretty boring month and a half of trading. But I say that and I'm up, almost 7% in my account. Like, I'm okay with that. I'm okay with having a good rip where if I've got a month and a half in, okay, I'm just going to ballpark this. So 1.5. So if I took 7% 8 times over, I mean, that's a pretty good return, right? I'm not saying that's going to happen, because obviously some of the trades that I'm up in January, February have other expirations out into April. I don't have a lot of expirations out to May right now. I've got some in the summertime that I've had leaps from last year. But point is, like, I'm off to a pretty good start without the market really having to do any type of major direction. So it's been just a lot of trading, a lot of income trading, and just taking my profits, redeploying capital, and just working through, A to Z. So anyway, all right. But it's bar counts that I'm watching. Big bar counts on the entire S&P, big bar counts on the Dow. I do like the Russell, but I just don't love IWM. I really don't. I'm not saying that it's bad, but for 2,000 stocks, I feel like it's almost representing too many crappy companies for me to get that interested. I like what it stands for. I think that small caps can come back in a big way. But overall, it's like we still have to have large caps be very solid and stable. I don't think that small caps go up without the large caps going up as well. We're not going to have this market where, S&P is down, NASDAQ is down, but small caps are up. That's impossible. It's probably not going to happen. So more than likely it would be, the S&P and the NASDAQ could be down and the Russell could be down less. That could be kind of the market broadening out. Everyone's talking about the market broadening. It's true. The market could broaden. Okay. So what would it look like? We'd have to see this. This is RSP, which is equal weighted S&P. If this goes higher, if we break out of here and RSP goes to highs, great. That's equal weighted. I would be a bit more of a believer that the market is in fact broadening out, and we're not doing it to the downside. If we go to QQQE, QQQE actually is making a pretty substantial run through the highs. It's actually making a better run through the QQQ highs. So equal weighted tech is looking a little bit better right now. I do have some shares of it. I'm up around $7 to $8 a share, which is fine. I wish it was more, but it was just another dollar cost average diversification where, I thought rather than dumping money into heavy weighted, high concentrated QQQ SPY, let's go RSP, let's go QQQE, let's throw some positions where it's not all Mag 7 weighted. And so far that's been a pretty good decision. The Dow is right off of these highs. But actually, even with, think about all the stuff that happened with DeepSeek and Tariff 1 and Tariff 2 and Tariff 3.0, whatever we're calling it right now. The Dow hasn't really done anything, So, this still looks like a pretty good index to possibly get to these highs, or a range-bound index where we struggle to make new highs. We have a fake out here and then price pulls back. We still have a bar count that I'm pretty interested in finding support with. And so if we come back down to this level, then sure, I will look at positioning for some Dow range-bound trading, And this is something like a 5 or 6% range, right? Yeah, about a 6 or 7% range. So through the election, about a 7% range. A lot of the Dow moves to the downside have been because of that was like United Healthcare. After their CEO was killed, that was a big weight on the Dow. That pulled it down quite violently, but it's recovered pretty nicely. VIX 1 day. VIX is up a little bit. VIX is up 1% today, just around 1.5%. It was up a little bit more than that earlier, but still we're not getting like crazy high readings on VIX. The one thing I would be watching for on the VIX would be this. If we go from, let's say, 15 to 22 or so, let's say, we'll just say 15 to 20. We go from 15 to 20. The one concern that I would have right now is that the similar events that we had last year twice, this would be your August 5th volatility event, and this would be your December 18th volatility event. My one concern, if the VIX goes from a 15 to 20 plus, would be that from 20 to 40 is just one ugly day away. Right? Does that mean I want to get long volatility now? No, it just means that I would be patiently waiting for those dips and pullbacks that I'm looking for, some nasty weekend gaps or some nasty, intraday, intra-week price action. But we'll see this kind of the simmer, right? Like the market is simmering now with some volatility. Nothing that looks distressing yet. But if we go from like 15 to 18, 18 to 20, 20 to 23, it's that next leap that makes this really scary. That's when we have like the big vol events. So you can see here, like sneaking up into the 20s, it's faded most of the time. But in the event that it jumps, it's like that one more day, that one more push when things get really disrupted. So that's one outlook on the VIX. Just watching it, just keep an eye on VIX to see, are we going to have some type of volatility event? Because what's crazy is last year we had two of the largest single day VIX moves in the history of this instrument. And what makes 2025 like, oh, it'll never happen again? That's not true at all. We in fact could have more days like that, and that does make things pretty challenging if you never know, when you get some crazy, hundreds and hundreds of percent spike. I mean, this was up in a single day. The VIX was up 80+% in a single day. This one from close, or I know the wick is ridiculous, but even here at like a 60 to 7% move with just the candle itself, those are monster spikes on the volatility index. If I see a big spike on the VIX to the upside, I'm probably just going to buy SVXY or SVIX. I think SVXY plays out a little bit better, so I'm going to stick with that one. Dollar index, I still think we have some support at the 106, 105.50 area. Oil, I'm just going to stay out of oil. I took my little iron condor profits on CL. I'm good with that one. UNG, making a now we're talking, making a nice little run here. I've got an April $23 call that is looking better. I should be up a few grand on UNG right now. So UNG is here, currently up around 3 grand. Not bad. So I've got a 5 by 23. We're trading at 21 and change. I don't want to get out of the way here. I'm out to April. I don't know if I can do a quick roll on this, if it's worth it or not. Let's find out. So UNG here. So that cost me 18 bucks, or I should say max credit is going to be 18 bucks. It cost me 11.23. So 11.23 is trading for $15. Not bad. Could price come up? Let me check this $23 call right now. So what's my expiration if I want to roll this? Right now I'm only upside down about 20 bucks. If I wanted to do a quick roll here, not the whole thing, just the call side. So if I just roll the $23 call, I could roll it out. Ah, fudge, I don't have any expirations in between April and June. Are you kidding me? That's not what I want to do. I could roll it up to 25 out to June and be okay with that. Still get 50 cents credit on it and also give myself another $2 of upside. So that'd be $2.50 more per contract. I just don't know. I mean, nobody knows, right? It's like, is this thing going to rip up here and just be like gangbusters bullish? This high's around 27. If I also commit myself to a $25 sell call out to June, I'm kind of stuck on that trade until June if I want my max credit. That max credit would make it around 20 bucks, and I can see if I can get as close to that as possible without having to wait all the way to expiration. So, I mean, anyway, natural gas is working out pretty nicely. I think I will just stick to it because I actually want to see when I can get some expirations filling in the middle. So if I go to trade, I don't love that we don't have any expirations after April 17th. So I might have to wait another maybe 20 to 30 days and see if I can get some of these like end of April into May. If I sprinkle in an expiration in between, then maybe this trade looks a little bit better for me to play around with the roll. But I'm not going to do it until I get the maybe the May expirations to pop up. Okay, let me check on something here. Um, okay, but that's looking pretty good. XNG, another way to trade it. Gold, 29.34. We're creeping right back up towards these highs. Gold is going to be pretty resilient and probably will maintain some bid and flow until we hit 3,000 plus. Another one with a really high bar count. I love a pullback on gold. I just think that the gold bulls are pretty excited about watching this bull market, and this thing has been outperforming the indexes by a pretty decent amount. I think gold's up over 10%. It's in double digits right now. So from the start of the year to now, gold's up around almost 12%. That's a crazy outperformance. It's outperforming everything, Nasdaq included, S&P included, by a pretty wide margin. Gold futures, I'm just not going to force any trades. We have quite the bar count that I'm still going to hold off from like adding a bunch of positions unless we have dips and pullbacks. Silver, I'd like to see silver continue to perform well. I'm not going to say outperform gold, but perform well alongside it. I'd be happy with that. Silver futures looking pretty decent. Bitcoin added in some IBIT trades today. MicroStrategy, I need to stay above 310 to get it called away. Let me do a quick look at this one. So MSTR, now that we're through earnings, MSTR. So I have the shares. I have a 310 by 240 out to April. If I wanted to roll this out, if I have an expiration out to the end of April, I might look at this real quick. See if I can roll this collar trade. So I can roll it out. Fudge. I mean, it's nice. I've got to roll it out an extra 30 days, but 30 days pays me another $5. It wouldn't be terrible. I've got 58 days left on the put side. I mean, I'll take the income, man. Let's see. As long as I mean, if I walk away here with another $5, that is another $520 to my bottom line, which is pretty nice. That'll add in. My break even is 279. I lower it down to 274. That's doing some pretty good work on MicroStrategy. That's bringing it back below these January lows. There's a pretty strong support level around the 250 handle anyway. And if it just stays up and we get an elevated move, then it's just an easier roll that might be okay to get called away. So I think that may be worth it. 490. All right. Do I want to go out a little bit farther? Let's take a look here. So the 240, 310, got about, man, I mean, I'm rolling this like the halfway point. That's what I don't love about it. I'm not really getting enough value out of the call side. I mean, I'm in about 53% of the profit. But I'm also, this is an in the money sell call. So for me to roll it, I mean, all it's going to do is get called away. If price is greater than 310, it gets called away. That doesn't do me any good. If I go out and go another 30 days and I get an extra $5 of income, I don't have to change the strike, which is nice. I also buy my put a little bit more time if I want to lower the cost basis on the put slightly. So choices. I think it's worth it to have the income, especially if I can get an extra $5 for it. Okay, let me see. This is a little wide though. Bid ask is a little wide, but if I can get this thing rolled for, I mean, this is pretty wild. I can roll it up $10 and still get an extra, maybe 60, 70, 80 cents if it stays above 320. But I also like lowering the cost basis. Let me see if I can get a premium here if I go down to, nope, it's only going to give me 20 cents extra. So I'll take this one, keep the strike the same at 310. Let's see what I can get this one filled for. So hopefully it will fill me. I'm going to try to get filled at $5 on this roll. It may not fill, but let's find out. All right, got filled at 521. Okay, this one for MicroStrategy doesn't apply. This one for MicroStrategy, there's my 310, 240. Roll this out. Let's go to May 530. I'll try to roll it there. Not filling at 530. Let's try the 525. Okay, I got filled at 521, so I'm going to try to accept that as a roll here. You sneaky dog, you. 520. Gotta be sweet with the price. 515 got filled. Okay, this one for MicroStrategy, just partial shares, partial shares. This one partial shares, partial. This one has the 100 plus shares. Okay, so there's my 310, 240. Roll. Try to get 520 for this. Filled at 521. Okay, so I've got to do some math and some updates. MSTR, 274.36 is my break even. Rolled out to May 16 expiration. And it's a 310 sell call and a 240 buy put. That buy put should have been filled. The new buy put is right here. I got filled at 1050 on that put. I want to keep track of that debit because if price does fall and I can increase the size of that debit, I can also lower my cost base a bit more. Collected $5.21 credit. So the new break even would be a 274.36 minus 5.21 brings me down to 269.15. So now I've got a May 16 collar trade. Break even is 269.15. Okay. So now if price stays above 310, 269.15 minus 310 get called away on 3 accounts. It's $12,255 on 3 accounts. That's not bad for a little income trade that's just trying to collect some fat premiums. What's the risk if MicroStrategy it just falls off a cliff? If Bitcoin has, a reckoning, but I think so far so good. Probably a lot of indecision. If Bitcoin starts to catch bid, if we go from like the low 90s in Bitcoin back up to 100 plus, we're probably going to see MicroStrategy head higher as well. So I'm okay with this one as an income trade, trying to generate some profit there. All right, let me catch some comments here. Let's go back to the chat. Let's see here. John, Phil is 48 cents, currently mid at 48. Yeah, I mean, so can you get filled at 47 or 46? Trying to fill at 42 still won't fill. Okay. The trade on, let me check that one really quickly, John. So yeah, that was filled this morning, 559 by 545 for 48 cents. You can also just let it marinate, dude. I mean, honestly, if price goes down a little bit, that should be no problem getting it filled. So you can let it pend and be good till canceled if you want. That could work versus trying to chase it lower and take a lesser profit, or lesser credit. You can just let it marinate and see if it will fluctuate for a day and get you filled at 48 cents. I'd be okay with that. That way you don't take a bad fill. Don't take a lesser fill. I wouldn't want really anybody to take that fill for less than like 45 cents credit. Okay. Lee asking on the strategy, are you talking about MicroStrategy? So it was pretty simple. What I did on MicroStrategy was I did a bull put spread, right? So I sell a put and I buy a put, and then I was assigned on the sell put strike. So after that, now I own the shares, and I added a collar trade. right? So rather than just adding a covered call and wheeling my way out of it, which means I would be just selling covered calls and letting price get called away, I added a collar trade, which is I sell a call and I buy a put, and I do this for a net credit. Okay, so usually what I'm doing is I'm selling a call that's out of the money, and I am buying a put that is out of the money, and I try to set that up in a way where I have downside protection, but also a covered call, so I'm collecting premium, but I can do a collar trade which protects my downside and gets the stock called away with price appreciating, and I can still do that for a credit. MicroStrategy, the premiums have been pretty outrageous because I have gone from ownership. This is what's kind of wild here. When I first started taking ownership of MicroStrategy, it was buying shares at $346.90. And my break even right now is down to $269. So I have lowered my cost basis by about $77 in about 2 months. That's not too bad. So what is $77 on this? Well, if I lower my cost basis by $77, that would be the equivalent of around 20%, 20 to 22% that I've saved as far as my break even. Okay, now am I capping the upside? Yep. If price goes to infinity, I am not going to benefit from that big run to the upside. But what I am doing is still, working my cost basis down. And if it gets called away, it gets called away. And 269 getting called away at 310 is still fine by me. I'll still make like $4,000 per account, and that adds up pretty nicely. I still have downside protection, which is probably the most important thing for me right now, is just having that potential downside protection in case this market is going to do something really silly. And that's kind of what my mindset is. It's like, I want protection on things in case something goes wrong, right? In case this market cannot keep, pestering these highs. I mean, look, if we break this high, with some force, then sure, I'll be the first to admit, like, okay, we weren't as choppy as I thought. The market just needed to kind of digest the first maybe few months of Trump in administration and tariffs and this AI arms race. And now it's not just the U.S. arms race in tech, but now it's China, now it's Europe, and now there's deregulation going elsewhere. Now there's fiscal spending elsewhere. Look, the world is looking to play catch up. Okay. One stock, actually, I've got a screenshot of this. I actually wanted to trade. I'm not going to trade it right now because it's just been one of the better. Let's see here. Give me one moment here. Okay. I forgot what I was going. Oh, Euro stock. I want to add in Euro. There it is. So I need to find the equivalent here. Fudge. I have a screenshot of it from this weekend. I'm going to see if it's something with, it's either Vanguard instrument or it's a SPDR, like a spider instrument. Let me see. Where is it? That's what happens when you listen to podcasts all weekend at the gym. That is China. Okay. Should be FEZ. See if that's Wait for US traders. FEZ. There we go. So I can trade FEZ. Here's my Euro stock 50 FEZ. All right, I'm going to add this to the mix. So FEZ. Add that in. There's got to be another one in here somewhere. Aerospace and defense. FEZ is your Euro stocks right there. That's what I'm looking for. All this other garbage would be like mutual funds. All right. Give me 1 second. There might be a couple more I can look at. So FEZ, I'm going to add this in. This is going to go next to my DAX and my watch list. So where I have my DAX, there it is right there. So my DAX, my FEZ, that's tradable. And let's go back to images here. Okay, DXY, China, FEZ, and FESX. I think this is a futures instrument. FESX. Yep, that's Euro futures. Okay, so I can't trade that. And then SX5E. That might be the symbols. SX5E. Yep, that's just the feed for it. All right, so basically it's this. I mean, the DAX has been ripping like crazy since the start of the year. This thing has been probably one of the best performing indexes that we have seen globally. I mean, this is in the teens, I think. It is up around almost 15%. China's made a nice run as well. Germany's made a nice run. Gold's up, 11, 12%. So a lot of this has been kind of traction has started without the U.S. this year, which I obviously find that really interesting considering that the U.S. has been doing so well and has been a dominant financial market the last couple of years, especially since the bottom in 2022. But there's clearly some. I mean, maybe this is the new way of value. The new value is don't put all your eggs in the U.S. basket, especially when you're at these valuations. They tend to underperform, and it's funny how the real money and the flows and the direction has gone into what is uninvestable. Nobody wanted to touch China last year. Nobody wanted to touch Europe last year, and right now they're easily the best performing indexes and broad markets that we have. So is it short term? Maybe, but if there's real power and momentum behind these moves, I mean, I for one would just like to see a pullback. That's it. What I'm a little cautious of is like how much longer are we going to go above this 200 moving average, and how far away does it stretch before we have some type of pullback? So I mean, there's always a lot of elasticity in the markets, and we stretch away and we start to pull back, and then we build and accumulate some levels. And so if we have any type of pause, I'd like to buy FEZ. I don't know if I could position for it to do something in options. If I have it, this is actually a very inexpensive way to do it. But let me see here. How far do I have to go out to get anything that I want? FEZ. So I can trade it. We do have some decent options here. IV's at 21. If I went out to the end of the year, okay, would I be comfortable saying, you know what, I'm going to sell a put at $48 to the end of the year? Okay, let's see. Can we stay above $48 by the end of the year? If we do, I can make $1.40. Is it worth tying up the capital for that? Maybe. It cost me, for margin accounts about $250. My max loss, but it's an underlying asset that I would be willing to own. It's not ton. It's not super expensive. I don't think that's a terrible play. So question is, do I like it enough to take it? That's a long ways out. I don't think I have any expirations that are better than that though. So August, it's like August or January. That's a big difference. I go out to August, I get a lot less premium. I go out to January and essentially do just shy of a leap, set it at a price point that I'm pseudo interested in. I can always do this for like a ratio spread of some sort. Lows at 48. I kind of like that spot. If I did, this with a ratio spread. That's not bad. Like I would be willing to do this. I'll take a ratio spread. I know it's out a long ways. Doesn't take up a lot of buying power. If the FEZ or the DAX continues to go higher, then this $1.32 trades for, 50 cents, 40 cents, 30 cents, 20 cents. I'll take majority of the profit, move on, and apply the capital elsewhere. But for this trade to just sit there for the rest of the year, I mean, I think it looks pretty good. Could we have a nasty pullback? I mean, maybe. If I took any assignment, this is the next question, is if I took any assignment, I'd own it at 48 minus 1, and also minus the $1.32. I'd own the shares at 45.68. So this is essentially trading like an index, and I break even around $46 or $45. This would have to drop 17%. Okay, it'd have to drop about 17+% for me to have any type of threat on this trade. So it's not a bad position, if you ask me. Not a bad position. DAX, I mean, I think a pullback is good. I think we still have some room to run. I think there's a lot more fiscal policy and spending going on in Europe. I can't believe how this has obviously gotten a lot of attention here, that I just think it's a terrible entry. I don't like this entry at all. But going to something that is, fraction of the price, I could put this out of the way, right? I can put this out of the way. And what is price doing right now? We are just doing some last minute shenanigans here for the last few minutes. Okay, I'm just do a quick spot check on this one. So couple bucks here. Yeah, upside down a little bit on that end of day. That's fine. All right, trade is a question mark. Do I like it? 49 by 48 premiums are okay. If I go one strike lower, still get $1 for it. 86% probability of profit. I mean, $100 to me is fine. Ownership is okay. But it's like $100 to wait 332 days is not that awesome. So I'm going to take it. But I'm going to do this with portfolio margin accounts only. So see if I can get filled. Let me try one other setup here. If I do 48, 7, and 6. That one's okay. 49, 7, and 7, or 49, 8, 7. A little bit better. This would be assignment at 47, minus 1, minus $1.12. 44.88, slightly better break even. 86% chance of profit with a profit trap. I like it. I'm going to take it. So buying power is pretty minimal. I'm going to go after two contracts. I'll just go one for now. I'll go one for now, grab the $100, see if I can get filled where I want. Okay, we got 3 minutes for the close. $1.12 is not filling. $1.10, let's go mid price, or just under the mid price. $1.10 not filling. I'm really kind of looking at hopefully $1.05 or better. $1.08 not filling. $1.07. $1.06. Bid price is 90. All right, just got filled for $1.06. Okay, $1.06 is fine. Let's go here with the $1.06. Come on now. $1.05. Filled at $1.06. Let's go 3336. $1.05, $1.06. Okay, add that in. Right before the close, that's good. I'll take that trade. So that is FEZ. FEZ 1/16/26 expiration. Buy the 49 put, sell the 48 put, sell the 47 put, collected $1, 5 to $1, 6 credit. Willing to own. That break even would be assigned at 47 minus 1 minus 1.05, 44.95. Okay. All right. Holy crap. What the hell just happened? Look at this thing. Freaking shenanigans, man. That is some wild direction here. From 220 to close, this market's making fresh highs. Just what the heck? I think the SPY just poked an all-time high today. Do we have some major news going on right now for this close? What is happening? So we just ripped up to some highs today. Any news? That is so strange. We officially just notched, I think on SPY, we just notched a fresh all-time high. So that was a all-time high from Friday. We just notched another all-time high. And I guess that's how you do it. Just get some, nothing like the last 10 minutes of the day to do that. So crazy stuff. Again, is this a sustainable move? I have no idea. Are we going higher tomorrow? I have no idea. Let me see if there's any reason, any explanation. Okay, Musk eyes Fort Knox's next target. What we know about the $400 billion gold supply. I don't see any major news here. 16%. Is Intel just crushing it right now? Yes, it is. Son of a biscuit. I think I did a roll on Intel. So I have some shares. This is out to Friday. Son of a bee. Well, I'll look at this tomorrow. Let me see if I can do a roll on Intel. Otherwise, get it called away at 22 bucks with a break even. Break even's $21. And I'm going to see if I can grab an extra, 50 cents, $1, something over a couple more weeks. So that one should be okay. Intel's coming alive in a good way. So I put in some dollar cost allocation here. That's fine. I also did it's a diagonal spread. I bought the $3 call. So here's an example. So I have some shares, and that was about $1,000 allocation to it. So that's running for $400 in profit. And then I bought the 3x22. It's that I want to change. The 3x22, if I'm going to exercise those, that should max out around $19. And it's maxed out. Like I can't close it, but I'm going to have to exercise both and try to close it out around 19 bucks. The cost on that trade for me was around $16. So if I have the 1732 plus the $6, 1626 to get it called away for 19. Oops, 1626 minus 19. Oh my gosh, 1626 minus 19 there. $274 of income on the trade. Okay, so that's fine. But I'm going to look and see if I can get some extra legs to that, pull in some more credit. Everything's in the money. So if I rolled it out in time, maybe I get an extra 30, 40, 50 cents that just adds to the bottom line. Probability of profit's still really high to stay above $22. And then I'm letting the shares run as is. So right now the shares are benefiting in a pretty big way. Let's see if we can fill this gap. So my profit target on INTC would be right in here. We run in and we get into like $28, $29, maybe grabbing some short-term profit. If this thing is going to have any type of, just, I don't know, ballistic follow through or whatever, who knows? Then we pull back into maybe all the structure in the mid 30s. I want to say here, the fair market value, I mean, this is a dirt cheap legacy tech stock. Like, that's pretty exciting. So, I mean, even if it ran to $30 to $35, I mean, nobody knows. But if I looked at the options chain, what are market makers looking at for the end of the year? Plus or minus about $9. So if we go to like $31, $32, right now it's at $28, $29 from current price. So this gets up to the mid 30s. That would be within your expected move. So anything $30 plus, I think is worth protecting some profit. If I really wanted to sit on this one, then I could roll out to January and keep the strike around $20 to $23, pulling a ton of credit for it, and just let the thing get called away as long as price stays above $22. So there's some options there tomorrow that I'll talk about. Shop ripped up. That's good. That's what we wanted, right? I mean, we're higher. Yep, that's good for the day. So Shopify coming into tomorrow. Let me have a look at that one. I need Shopify to get up a little bit higher. Shopify. Yeah, I'd like to see Shopify around 135 if possible. Well, I mean, 133 is fine. 134, 135 is profit worthy for me. So closed out DoorDash for a profit today. Did that one come back in a big way as well? DoorDash, right around the highs. Closed that out for a small winner. MSTR, that one's out to this week. This is kind of sitting right in the middle in the dead zone, so that one might be a small loss. But yeah, Intel's looking good. Lyft trading at 14. I need this thing either to rip up to 17 or 11. We have some fresh trades on for. We got a pretty busy expiration coming next week. Got a few expirations for the 21st, but a lot of them out to the 28th. All right. This is some silly little price action here. That's a crazy last 10 minutes. I don't know what that means for tomorrow, but we're about to find out. So the SPY end of day pokes an all-time high after a bunch of chop. We'll see what happens tomorrow. SPX, I don't think it officially made all-time highs, or did it? It did. Wow, SPX officially notched another high. So we are at SPX high number 1 for the year. SPY, that's poke number 3 for the year. Equal weighted, looking a little bit better end of day. NASDAQ, another aggressive final 10-minute surge, but we did poke a fresh all-time high today on the NASDAQ QQQ. NDX, did this also hit all-time highs? Yes, it did. So we're notching some all-time highs. If there's some momentum behind it, hooray. If there's not, I think this is a bunch of noise with a monthly expiration coming on Friday, the 21st. Okay. So, all right, I'll let you go for today. We'll come back and tackle it again tomorrow. There's going to be some schedule stuff going on this week. Tomorrow, I will probably end up pushing out the final hour segment to around 3:30 or so p.m. I've got a webinar from 2 to 3:30 and some meetings before that, so I might be a little bit late to the final hour session, but when I start it up and go live, I'll post it in Telegram. Let's see here. Thursday webinar. Thursday should be fine. Friday should be fine. And then next week's going to be busy. All right, cool. So, all right, I'll see you tomorrow. Any questions? We all good? All right, John, it's fine, dude. Like, those trades should be fine. If you let them marinate for, tomorrow, I mean, don't do good till day. It's like they're good for the week. I'd say you can sit on them for the week and be okay. Just like I said, don't take a lesser fill. Don't take the 42 cents or 43 cents when I got filled at 48. Try to let it pend and see if it'll fill at 48 cents. Okay. All right. And I'm looking for any scramble at the end here. Wall Street set for higher open with Fed policy, Trump tariffs in focus. That was 7 hours ago. I don't see anything that gives me a reason why these markets just ripped up in the last 10 minutes. So, all right, tomorrow's a new day. Overall, not bad. I mean, again, I'm not at my fresh high for the year was 177. I'm sitting here at 169. So still, green day, which is good. Took a lot of trades today. I've got 94 trades logged and 169, 170 for the year. I mean, just trying to hang out near these highs is good. Lots of protection, lots of 0.25% risk, lots of hedging, lots of income trades. So being pretty active. All right, sounds good. Okay, ball out. What are you doing there? Sell 100 put, buy 98 put. She's doing a credit spread. Walmart trading at 103. I've got my Walmart trade rolled up to, I think I rolled them up to 105. Walmart. So I've got shares and I've got rolled it up to, yeah, I've rolled so I have a collar trade on my Walmart position. I've rolled my 200 shares up to 105. Currently up around $2,000 per account. So Walmart overall should be a pretty good chunk of profit. Position wise for everybody, Walmart is up around $8,400. With some upside potential. If it gets called away, it's got to get called away at 105. I've got some time in the trade. That 105 covered call is out to this summer, which I don't know if we're going to. I mean, if we get there, that's cool. But if we don't, we chop around. It would make some sense to me that, Walmart is going to have some type of pause or pullback. Costco had a pretty decent sell off today. Netflix had a decent sell off today. Meta had a decent sell off today. So, are we going to see some more rotation here? We'll find out. But dips are good. I'd love to see some legitimate dips. Meta has another ridiculous bar count. This is probably one of the largest bar counts that I see on a stock. Last time we hit the 200 moving average was way back here, sitting around 500 bars. So I might look at Meta tomorrow for a call condor, but it has to price out really, really well. Because if it doesn't, I'm not taking that trade if that thing is still going to find a way to rip higher. Netflix, I got a little relief on my next Netflix trade. We're trading at 1030. I've got a pin price at 1040. I hope we have a little bit more downside just to find some pullbacks. Another very high bar count. Last time we had a bar count there was in the 300s, I think. 333 bars. So not quite like Meta, but still pretty high bar count with this stock stretching away a lot percentage-wise. So we're around 26% away from the 200 moving average. We'll see. This trades out to the end of the month. Okay. All right. I'll see you tomorrow. Thanks. Bye.